make some money on those puts.
Yeah, yeah, that's what I'm talking about, right? Like we pretty much like talked about the, direction of the markets last week, saying that it was pretty extended. Um, like the structural setup of it. Oh, give me 1 second here. Just gotta push a quick button. Yeah, like it was just spot on. Like S&P 500, whichever was up saying
19%.
that it was pretty
Oh,
extended. There you go. Up 19% year to date, and then it declined quite a bit. So this week's a little bit different. I'm anticipating, I mean, I still feel, direction is going to be down in the next 60 days, but this week might be a little bit different, right? There might be like a bounce, but uh, let's get into it shortly here. Let me just make sure all these buttons are good to go. Perfect. Okay. All right. Wait. Oh, I want to move one more thing. Give me 1 second. And then there we go. Okay, welcome guys. Hey, welcome Bernard. Haven't seen you in a while. Let's see. How are you guys doing this week? I actually do want to pull up one more chart over here and also the chat box. Give me 1 second.
yeah, I was actually on vacation in Quebec City and Montreal, Canada for the week. It was fantastic.
Man, that sounds lovely.
Oh yeah, it's très bien, monsieur.
Let me show you guys this real quick. Sorry, I want to pull up this seasonality chart. This is so awesome. Uh, S&P 500. Okay. All right. V says doing good, always learning. Yeah, I think we're gonna learn a lot today. At least I think so. So towards the second half of today, I do want to dive into this robotics report, right? So that will be a topic. I haven't looked into the report, you know, just yet. So I'm pretty excited for it. So we could do it all together, and then in the end, I'll post the report inside the investment club over here, because this is the direction that we're going next, right? Also, if you guys notice, I've been posting a lot in here. So I think moving forward, I really want to do a lot more of like sharing of like getting into like the granular investor stuff, right? So we'll dive into that. But anyways, let's see. This is a man. Happy Sunday. Good morning, everyone. Hope you're doing well. Markets last week, I think it behaved exactly the way we expected. Can we say? I don't know. What do you guys think? Do you guys think we were spot on in terms of what we were anticipating based off of what we saw in the seasonality chart over here? V says yes, all capitalized. Yeah, I know, right? So just last week, I mean, last week, was it this day right here? I'm trying to see. Basically, I think it was like 2 weeks ago or whichever day, right? We were looking at this chart right here. Now, for those of you who are new to this, let me give you a little one-on-one of what this is. What I have right here, again, this is Sentiment Trader. I pay like 75 bucks a month, I think, for this. But basically, they have this awesome S&P 500 seasonality chart right here. And at first, I'll take out the red line. But basically, what this is a quantitative back test of like the S&P 500 performance in the last 30 years, right? So quite a bit of data going into this, the last 30 years. And basically the blue line shows the average performance of the S&P 500 every year for the last 30 years, right? In the cumulative return, and this is what it looks like. So in the last 30 years, it performs about 10% or not, yeah, 10.09, or you could say 9.16% every year, right? And then it'll go through periods of decline in like August, September. And so I'm leveraging this to kind of gauge where we currently at, and in terms of like what month are we in and what seasonality is likely to play out next, right? So if I now overlay or add in the current year performance, this is currently where we're at. So 2 weeks ago, I think it was 2 weeks ago or last week, right? We were looking at the S&P 500. It was up about 19% year to date. And I'm just thinking like, okay, we're halfway through the year. If we continue this trajectory, then we're going to be like 40%, year-to-date performance. And I don't think that looks good from a politics perspective, right? With the whole election and stuff like that. Now, that also creates uncertainty and then also like global conflict. So the other interesting things that we saw this week, and I posted in the FinViz group over here, and I encourage you guys to join because we got about 44 spots left, right? Because right at $100, I'm going to put a price tag on it, which is probably going to be like 10 bucks a month. to be able to join. But the first 100 people get in for free. So if you haven't joined, I encourage you to join because I'm going to be posting a lot in here. But what I posted in here was a trade idea. And the trade idea was a potential catalyst on Boeing. So this was the news right here, right? U.S. intercepts Russian Chinese bomber near Alaska, and it's something that kind of it's something that I don't think, again, I don't track this like religiously, but I don't think we had something like this sort of situation in a while, right, or ever. So that was interesting. And so as I was looking at stocks, if we look at Lockheed Martin over here, right, this thing shot up on earnings. So that's Lockheed Martin, one of the biggest. This is RTX, previously Raytheon. They changed their name to RTX Corporation. Now you call them instead of Raytheon, you call them RTX Corp. This one also up big right here, right? And then you look at Boeing, and Boeing's like down, and Boeing has earnings next week. So I'm going to speculate on some calls on earnings for next week. I already bought it, of course. Come Monday, you're probably going to have more premium. There's a good chance that we might, push up a little bit on Monday or up until earnings. So yeah, I posted that trade idea in the group chat over here or the community. So I'm going to be building this for probably the rest of my life moving forward. So I encourage you guys to join, right? 56 members, right at 100 people, then that's the cutoff. And yeah. Anyways, we'll talk more about Boeing because I actually want to dive into the technicals of Boeing because I just think the setup looks pretty good, right, across the board. The only thing is like, what is the market environment? So that question now goes to where would you guys like to start today? Should we start from the top or should we dive into stocks or should we dive into the report? I think the report, I'm going to save it for the second half. But this is the report right here. It's very exciting. I mean, again, I haven't read into it. Someone passed it my way this morning. And so, yeah, I actually want to dive into this. This looks really interesting, right? Because it's perspective from a pretty serious fund out there, Coatue. I mean, Coatue is no joke, right? At least as far as I know. And so their insights are going to be pretty good in this report right here because it will really help us develop like, all right, how do we think about robotics in like the next decade here? Since this report is all about AI and robotics, right? And if you look at Elon Musk's, earnings shareholder deck over here, well, they're also promoting the whole robot, right? So we might get to a point where AI is just so good that we want like a robot walking around our house and to assist us like in our everyday lives. Again, not a joke, but that's the direction that we're heading. We're heading in so many different directions, but man, I freaking love it. Um, V says top down is always valuable for me. You guys okay with the top down approach? Let me know, okay? Because if not, then I guess we just dive right into it. Because I do like to warm up a little bit here.
Stocks first would be good.
Okay, Bernard says stocks first. We always do top down, but stocks first, huh? Well, if you have stocks, you let me know. Well, how about we serve both V and Bernard? We talk about both stocks and top down, right? Yes, Nancy says stick first. Stick first it is. I know, I'm just kidding. You're talking about stocks. So we'll do a little bit of hybrid, right? We'll do top stocks first to kind of give V that overview, and we'll kind of squeeze in some of the macro as well, right? Because there's so many things I want to talk about. So let's start off with some of the actionable stocks that we saw this week, right? I didn't check the Lockheed Martin earnings yet, but let's actually move this over here and show you what it looked like before earnings. So earnings is right there. This is what it looked like before right here. And you can see on the left side right here, there's massive volume right here. Now, the massive volume is really at the 200-day moving average level right there. So we know someone, or there's a lot of price participation at this price area, right? And mostly what you got is just consolidation. And then up to earnings, you then gap up, right? You have this huge gap up, but wait, a lot of like investors or even traders are like, oh man, it gapped up, it ran without me. But believe it or not, if the mantra is don't be cheap, right? Look at this. It went from 500 to 520, and then all the way to 524, and basically just that, right? Now, will it pull back? Yeah, probably. It needs to take like a momentary break, maybe pull back to like 510 somewhere along the way. But that's okay, right? Because what I did was I'm like, all right, if people are so hot for Lockheed Martin over here, what else is in aero defense? Boom. Let's go to the list right here because we're trying to understand like how, what other similar stocks could we play off of this? And I saw Boeing, and Boeing's just like beaten down. So I think the market's slowly recognizing this. But if you look at it, right, number one right now is GE Aerospace. Right? I mean, this one really came up. If we look at GE Aerospace right here, this one's a $170 stock right here. And waiting for my internet to load up right there. There we go. And you also have massive volume buying right here, right? Look at this massive amount of volume. I mean, buying and selling, but a lot of action right here, right? So someone out there really likes that 160, and we're post earnings as well. So we zoom out. This one looks like it's going to continue to be a performer, right? This is actually looking pretty good. Actually, this is going to all-time highs. No, wait, well, too early to say that. Not all-time highs, but it's trying to go much higher, right? So we know GE Aerospace is trying to go higher. We go back to the screener over here. We look at RTX, the next biggest aerospace and defense company. Again, this is what RTX looks like right here. This one, okay, so we know GE's gone up, we know Lockheed Martin's gone up, and we know RTX has gone up, right? It's almost like then I think there's probability. I'm not going to say it's guaranteed. There's probability that I think Boeing might go up as well. And so if we do the analysis right here, what do I have right here? There we go. We do the analysis real quick, and boom, let's give you guys the analysis. So we look at it. You got, I mean, the volume's kind of like everywhere, right? You got a little bit right here, and then right here, right? So like three different groups right here. So you got a whale right there. You got whale 2 right there, and then whale 3 right here, right? And so prices tend to gravitate towards the whale or explode away from the whale. So we know that right here we just had earnings. Raytheon or RTX is now exploding away from whale 3 right here, right? Or whale 3. We're exploding away. So we're exploding away. We want to zoom out. Which way are we going? Are we going to all-time highs? I think as far as I know, yes, that's all-time highs right there. So there's massive demand for aerospace and defense stocks. Why is that? Why do you guys think? Right? I mean, could it be like, this first time in ever post that I did right here? Well, okay, I mean, many posts, but first time in, ever with the whole US intercepts Russian Chinese bomber off of Alaskan coast, right? Nancy says World War III around the corner. Hey, who knows? I really don't know. But what I do know is that, people with a lot more money than all of us in here are piling a ton of money into companies like RTX, GE Aerospace, and then, I said RTX, and then Lockheed Martin, all aerospace and defense, right? But the only one, if we go back in here, Boeing's up here, right? Boeing's $115 billion market cap, right? Everyone else is piling into a 184 billion, 151 billion, 125 billion. This other, 115 billion is beaten down, right? So we could look at General Dynamics and all this stuff too, but just to confirm, I mean, I guess that would be interesting to look at as well. But currently, the trend in the last, 1 to 2 weeks here is that there's a lot of interest in these aerospace and defense stocks. So if I zoom out into Boeing, this is what Boeing looks like right here. We're looking at the monthly, by the way. So this is a little bit more of a zoomed out perspective, but that's okay. What we're going to do is we're going to annotate, and we're going to see, oh, I didn't have the MACD in there, but that's okay. We know that there's quite a bit of volume right here, and there's quite a bit of volume right here, right? And there's quite a bit of volume on this day, and very little volume right here. So nothing significant as of late, right? Besides the sell-off. This was a significant event, and this is the significant price. So we know that a giant whale sits somewhere right here. Whale 1 right there, right? And then we go whale 2 right here, right? There's probably a whale right there. So it seems that we either gravitate or explode away from the different liquidity pools or different whales. So for one thing, it seems like we gravitated from whale 2 down to whale 1, and now we're kind of cruising up, right? That's pretty much it. I mean, you can't. I mean, earnings is coming up, right? So earnings is just around the corner next week, and I'm going to speculate on this one because I think there's a probability that it will go on to the upside. So we know there's support right here, and we know there's support right here, and we also know that this is the 200-day moving average right there. That it's basically found support, not just one time, not just 2 times, but 3 times. So 3 times on that monthly 200 MA support, and we know that there's whales present around these price areas right here. Right? Now we know resistance is up here, obviously, right? Prior breakout failure right here. So that became a big short trade right there, right? Rejection right there at the 400. So that's going to be future resistance. But for now, the 250 is really the target. So if we could gap up, and run to 250, we'll test 250. We clear 250, it could probably go to 300. So that's what I'm seeing with Boeing, right? I think Boeing's going to be a very exciting trade. If the environment remains right, again, we didn't calibrate to the environment yet, but I'm just showing you like what I see in Boeing relative to the other names out there. So what do you guys think? Lockheed Martin, GE Aerospace. Again, this is not investment advice, by the way. This is just for infotainment. educational purposes only. But Lockheed Martin, RTX or Raytheon Corporation, GE Aerospace and Defense or Aerospace, and Boeing, right? The other three of the 400 billion plus caps are rallying. This one's not rallying. So to me, I think that's a sort of a play. It's a trading thesis, right? So I'm looking to play that. Now, would you guys be curious about where am I playing it up to? I mean, I have calls, right? I have everything from, maybe slightly out of the money calls basically because it's a little bit cheaper. But it's not recommended to play that way, right? How long do you think they will ride the high? Oh, as in like how high will they go? Oh, okay. Well, it depends, right? Because we could gap down. If we gap down, we actually go lower. Because if we gap down, we're gravitating away from this whale that exists right here in this area. So I'm guessing if we gap down from right here, from where we are, 180, then we'll go down to the next whale area, which is 150, right? 150 is truly where the big money is hanging out. Let me see. If we keep on, okay, I mean, if we go back to like 2000, maybe even uh I mean, yeah, sure, 2000 right there because when I adjust my time frame, this volume profile it changes as well, right? So if we look at it, the biggest whale since 2000, the biggest player since 2000, I'm guessing, has been accumulating around this price area right here. So 140, 150. So how low can we go? Probably 140. That's probably like I mean, there's massive buying efforts over here, and then massive buying efforts over here on the dip, right? So, and then we measure the move. How much was the dip from the high? This thing dipped 75%. It's currently from the high 60% down. 60% down, and its peers are basically moving up. Uh, but then the market environment's uncertain right now, and we know that one of the fattest whales is hanging out at 150, right? So, how high can it go up? I think we first have to run up to. I think if okay, I think positively because I'm betting long, right? Again, not investment advice. I think it's going to gap up on earnings and we're going to clear 200. The moment we clear 200, we're probably going to run to 250. And then I think that's where it sees problems at 250. So we might gap up like 220 in the next 7 days, right? I'm just basing it off of like next 7 days. So we measure, right? We do a measure move as well. So let's say we gap up 14%, right? So I'm forecasting 210 in the next 7 days, right? If we gap up, yeah. Now, if it becomes a 20% gap, then I might want to sell right away, right? If we gap up 20%, so that means 230. Oh my gosh. I guess no, regardless of what happens, if we go 220, I'm selling, right? Because I know it's going to pull back a little bit. I mean, and then if we actually get to 230, then that's a pretty good, that's a 20% move, right? I mean, 20% move is pretty darn good in just like a couple days. Again, this is just a lighter bet because it's an earnings play, but that's what I'm looking at right now. If you want to do the measured move, or I guess you could kind of measure like the low to high over here. It's about 15%. And you slap it over here, then you got about this much right here. So around 210. So yeah, I think it makes sense. Like 210, 220s, maybe like that price area within the next 30 days. Is what I'm thinking. But again, we didn't calibrate to the markets yet, so most folks don't know what the market condition is just yet, right? But I'm excited to dive into that and show you folks some more. Anyways, what else? What else? What else? Let's see. So if we go over to what other stocks could we look at? I want to pivot over to the FANGs, and when we pivot over to the FANGs, let's do Tesla first, right? As we go to Tesla right here, uh, well, we called this one out in a way. Let me see. There we go. So okay, first of all, we talked about this before the rally. We were talking about this at the 180 level, right? 180, and there was a good amount of buildup, right? And you also saw the whale right here. How about DXCM down 40% on Friday? Let's look at that one after Tesla right here. I'll look at that one. If you guys have other stocks, let me know. We'll dive into it. But if you look at Tesla right here, 180, right? We called that 180. Again, I thought it'd be sooner over here, but it actually took a little bit longer, right? 180. And then boom, ran up like crazy. And I think a lot of people were just FOMO like crazy. But you see my big red line? I know it's kind of like a mess, right? Big red line right here, right? If we zoom out, what's that big red line? It's a very important red line because it's one of the longest resistance trend line ever. and we ran up huge, and there's a good probability that we'll come back and retest it. We did exactly just that. So look at that, right? Wait, hold on. This is the weekly. Yeah, we shot out of this major resistance trend line that lasted for many years, or more than 1 year. How many years is that? All the way back to 2021, mid 2021, right? Man, and then we came back and tested that. So now we should find support at 220 because I think the trend has changed. But again, it's also dependent in the next 30 to 60 days here, right? Because my next 30 to 60 days sort of forecast is not looking too good, right? And there's reasons to it as we're going to review the S&P 500 and all that. But this is Tesla right here, maybe a bounce around this area right there. But let's go to DXCM. Uh, let's look at what Bernard's looking at over here. So let me ask you, Bernard, like what's attractive about this one? Is it because it's down 40%? I mean, yeah, 40% is a lot, and it's very likely to bounce because I mean the numbers
This
are
is
like,
the
no,
this is
go.
the classic example of a company that's doing moderately well, but has a disappointing guidance by far, and it goes down 40% in a day, right? So is it a question of an overreaction to a disappointing guidance with, so-so results? I
Hmm.
mean, 40% is a pretty big drop for a day.
Yeah, it's a really big drop. Like 20% is what I think about as a max, you know? And now we're looking at 40%. Man, I don't know. Uh, I mean, without a doubt, this is looking very bad. But in terms of like a dip buying, I actually like a 40% dip, right? I actually don't know what the news is. It can't just be earnings here, right? Is there something bigger? So now I would probably, okay, look, like within earnings, if you give bad guidance, I'm guessing like 20% sounds okay. Down 20%, like that's my mental maximum. But then if you're down 40%, okay, I think there's something else here, right? So did you look into the press release or anything? We could look into it right now, see
It
what's going
basically
on.
says that their forward guidance was dropped by like almost like $200 million. And I don't recall the reason behind it, but it's just a horrible guidance overall. So the question is, is there a rebound, 3 to 6 months later when they heal and get back on track?
Yeah, well, I think there could be a very near term rebound because I didn't catch this one. This was like on Friday, right? I think again, 40% is like a lot. Like wow, right? And we're talking about this is not a small one. I mean, I think this number needs to be corrected next week. It might not be 25 billion anymore. But I actually want to read into this maybe a little bit because if we're talking about like dip buying, I mean, okay, well, first of all, full disclosure here, like I'm looking at it from a trader perspective. Like I know that, hey, look, if anything drops 40%, there's a good chance that this thing will rally 10%. So I might jump in for just like a 10% pop, right? Because it's just down way too much. It's a company that's in the billions. They're doing billions in sales, right? They're not, we look at some of the other stats over here. They are profitable, right? Billions in sales, about 4 billion in sales. What else? 9,600, in terms of human capital, employees. It's optionable. What else we know? Price to earnings. I mean, I don't know if these numbers adjusted yet because they happened on Friday. But again, it doesn't seem, overvalued to me. Well, maybe. Again, I don't look at the space, right? But let me see if I could pull up a more real-time DXCM. Let me see. DXCM stock. Because I think, Bernard, you're probably looking at it from like a rebound perspective, it sounds like. Plummets on
Well,
revenue
yeah, this
guidance.
is the one I think is actually going to go down on Monday, like another 1%, and then level off, and then,
It could rally
slowly
five.
go back up in 6 months.
Yeah, that's well. I mean, you'd be surprised. Like it might go a little bit more, like another 1% on Monday, right? But if it goes down 5%, like that's a really good like rebound right there. It could rebound like 5%. So this thing could very much rally like 5% come next week, right? So I would like to dive into a little bit more. The current market cap, okay, I guess it is 25 billion right here. I mean, I could go and do the calculation later, but this is actually a really interesting one for like a pretty opportunistic trade, right? Let's zoom out. Let's get a little bit more feel of what's going on. So this is what the monthly chart looks like, and this is looking nasty right here, right? Because that's a big red candle. Usually after something like this, it's going to go down further, right? Now, what's likely to happen is I think we're going to rally to 80. Oh, oh, where's my annotation? There's a good chance that we rally to 80, and then it'll look something like that, right? So yeah, uh, from here to here. Oh, you know what I forgot? This is annoying. I forgot something. Give me 1 second. I did forget something. Hold on. Sorry. I was supposed to press the record button.
Recording in progress.
Oh man, I'm sorry guys. I forgot to record. It's okay. It's okay. We were just talking about stocks initially here. We didn't go through the full discussion just yet. Um, but yeah. So what I'm looking at right here is down 40%. I think it's going to go something like this. I mean, look, if you want to play this, right, 65 to 80. That's a high probability move because nothing can go down. I mean, have you ever heard of like $1 billion stock that drops like 100% or 50% or like okay, well 40% without bouncing? It has to bounce. So I think this move is just a little abrupt or a little too abrupt, and I think a rebound is very imminent because I'm also looking at the bigger picture for next week, and I think next week we might get a rebound, right? So that's something I want to dive into as well. Give me 1 second, sorry. I just want to check something here real quick. Just want to make sure this is working. Here we go. Should be okay. Okay, perfect, perfect. Okay, so let's see. So now we know the bigger picture, right? We know in the long run, all the volatility is definitely expanded on this stock. We know in the long run it's probably going to get like, negative sentiment. It's probably going to go lower. This is kind of similar to CrowdStrike, but then this is like more severe in a very short period of time. So I think more than anything, in my opinion, not investment advice, I really think this one's going to bounce. And if you want to capitalize on this, I'm thinking, again, whatever happens Monday, maybe you go down extra 1 or 2% or even up to 5%. Uh, and then it bounces. But I think we get a good bounce upwards of like maybe 80, right? That's what I'm thinking. But after that, I would leave because I think it's going to go the other way. A good bounce will occur, but after that, I'll go to something else. So I think I should add this one on my list then. So thank you, Bernard. This one is very opportunistic, but I like it from a opportunistic perspective. But after that, I'm out.
Hey, thanks, Kay. That's cool.
Yeah, yeah, yeah. Because again, like 40% is just again, this is a real company, right? It's in the 25 billion valuation here, and it just dropped way too much. So I think just the logic and the nature of the markets are greedy, right? It's fearful and it's greedy. I know this is a fearful time, but then people are going to be looking at this percentage right here. So anyways, what value could this use case you could say or case study. I keep thinking of use case compared to case studies. What value can this trading case study bring to us for future examples, right? The lesson here, guys, from what I've seen in the past is that any real company like this is a real company that's suddenly down on earnings way over 20%. Like the short seller is not like I don't think any logical short seller will want to short it any further at the moment. It has to always bounce. So this strategy right here is they call it BTFD, buy the freaking dip strategy, because there's a very high probability that it's going to bounce because this is just someone just got out way too quickly, way too recklessly on earnings, and it didn't give the company a chance to like really speak out. Now, unless there was some sort of news that I didn't see and is actually a lot more negative. So that's the only caution right there, right? To do a little bit more extra analysis. But overall, I mean, earnings gap down like this, geez. Let's look at CrowdStrike. Right now, CrowdStrike, this one is going to be interesting. I think this one goes lower in like the next. This one's harder to forecast, right? Like I think people are trying to buy the bounce or whichever, but you guys already know, right? They were on the news, and the news was sort of like the biggest news that maybe everyone in tech kind of knows, right? So what? It's a great company, but they slipped, right? And this is what the charts look like right now. And what I think is that with a global scale news or narrative, negative narrative like this, it's gonna basically again, global scale negative narrative, it's going to make the stock not popular for some time. I think this one goes lower now, right? It did attempt to break out. Don't get me wrong. I was actually interested in this. I was interested in this because I was watching that 400, right? It was like consolidating up here, and I thought I was going to break out, go over 400, and just run to like 500. Genuinely was ready to buy this. I kid you not. And then it started to fail right there, and I'm like, oh wait, nope. And what I realized, one of the lessons is that when a bull flag, right, when a bull flag like this is no longer valid, it actually becomes a short trade, right? And so it gave that indication right there. It broke the 20 MA, right? And then it broke the 50 MA, which is basically like, oh man, more signal to go short. And then the news came out, right? And then it really tanked. Now, this is one of those scenarios where it's a little bit different than Dexcom, the company that Bernard showed, right? This one is down also about almost 40%, 36%. And yeah, maybe there is a chance for this one to bounce, but the Dexcom was way more abrupt, right? Way more abrupt, which leads to, more of a quicker move to the upside. This one wasn't as abrupt, I guess you could say. But if this one does bounce, we bounce to something like this, that green line right there, right? Because that green line was the major support that I was looking at. But now we're probably going to come up and find resistance at the 200 MA because this news is pretty. Again, it's stock prices move based off of like sentiment and narratives, right? And so the sentiment now is bearish, and the narrative is very bearish. So I'm thinking like, yeah, this could bounce because there are people who just, how do I say it? Like remember the oil story where oil prices went negative, and like, I had some, investors in the investment club. They're like, "Okay, I bought oil," and then like it went negative, and they're like, "What the heck?" So you just have like these pioneers that love to buy dips, right? Which makes sense. Like, if you're dip trading, that makes sense. But some pioneers think that this is the time to buy. This is the time to accumulate. No, this is a falling knife, right? And the falling knife right here looks like it might want to bounce, but the general direction is down. And if we forecast to where I think it could go next, I mean, this is looking very bearish, right? Where I think it could go next for CrowdStrike, if it does not go back above this price right here, which I will highlight shortly. My system's kind of slow today. If it doesn't go back above this price right here, right? So this was the prior high right here, back in 2022. We had that bear market, right? We got out of that bear market right here. We came up, and then we finally cleared this right here, and we found support on it, which is even better. And then we attempted to go higher, but what happened was basically double top right there, right? I mean, it's on the monthly. It's a little. It's the different than the monthly chart is different than the daily chart, but essentially what happened is that we went down and then lower, back below this line right here. So if we cannot get back over here and hold this, and the markets prove to me that it could go higher, I actually think this will go lower. So what will happen is probably more realistically something like this with a negative sentiment, right? And where we go next, man, I don't know. I mean, this is like global scale news, right? Like I'd probably say we go down 200, but I was telling David earlier this morning, like maybe this could even go back to like 100 because the news is like, that bad, right? The volume is really kicking up over here. So this one probably goes lower. I think this one shorts puts on a bounce, right? Again, if you're gutsy and you want to take that, that's what I'm seeing with that. But there's always other trades. Bernard says, oh my God, what? OMG, what? OMG is going down even more. I had sold before and just bought again after the crash. Wait, hold on. Bernard, I think Bernard, you're talking about CrowdStrike. I had sold before. He bought 2,000 shares. I had sold before and just bought again after the crash. I predict companies will say they still back the company. Yeah, I mean, I would not my style right here because the falling knife just started, right? And when a falling knife just starts, we don't know how much it'll go down. It's high volatility, right? You gotta understand how to trade a high volatility moment. This is a high volatility moment. I personally, for me, I don't like to accumulate long-term positions in a high volatility environment. It just doesn't make sense, right? It's better to accumulate long-term in a low volatility environment. So like Okta for a long run, right? But then right now the environment's not too good, so Okta can't really perform, in my opinion. So looking at CrowdStrike, Yeah, this is a falling knife right here, but the falling knife is getting pretty extended. I mean, as you can see right here, if we were to go in here, do some annotation, you got like a falling wedge right there, right? Falling wedge typically suggests that once it clears out this wedge, right, it might bounce a little bit. So you might get something like that. But you have clear, very clear resistance at 300. So, if you bought, right, for a dip trade, let's say if we get lucky, maybe you will, right? Because I think there's a good chance of a bounce next week across the entire markets. Then we bounce to 300, but at 300, then that's where I think it probably slips, right? So yeah, that's what I'm thinking. But in the long run, right? In the long run, okay, so you gotta think about it. Like, remember the example? And I learned this a long time ago in like trading school when I took trading school a long time ago, which is basically trading is like, you're imagine yourself on a farm and there's a bunch of sheeps on the farm and lightning strikes. And out of nowhere, the sheeps or the goats or the cows or whatever, they start running in whichever direction. They don't know what direction. They just keep running, right? And the lightning strikes. They hear the thunder, right? One sheep or cow or goat starts running, and then the other one runs with it, right? And then they just run for a period, and they don't know why. That's a period of a falling knife. Like the emotions are still running, and then after some point, they'll start to slow down, catch their breath, like, wait, hold on, why was I running, right? So right now, that's the same thing with charts right here. I feel, right? Thunder or lightning just hit, right, and then it dropped, and now right here it's just like starting to slow down, slow down. You got a falling wedge, and then it's gonna bounce. Like, wait, hold on, why am I selling off so much, right? Now, Dexcom is a different scenario. Dexcom is like, man, earnings gap down 40%. Oh my. Yeah, come Monday, I think there's a very high, like, in my opinion, I think there's a 90% chance this thing bounce, right? Bounces over 70 on Monday. So if you know that, then you could craft some trade ideas around it. But again, it's not for the it's for the quick hands only, right? If you got slow hands, don't try to push it because it might be kind of dangerous. uh, Bernard says, I'm basically investing what I made over the last 6 months. Yeah, but I wouldn't invest like that though. Not in a falling knife setup, right? Like, I mean, you guys tell me it. Like, there's different positions to it, right? There's the falling knife, and then when the knife has fallen, it's flat on the ground. I prefer that. And the one flat on the ground is something like an octa. Now, because it's flat on the ground, it's going to be kind of boring for some time. But the nice thing is that it's kind of flat on the ground. And we could zoom out, and I'll show you what I mean, right? Yeah, this is actually perfect right here. So this is what I mean right here. Why you don't want to catch a falling knife. Oh man, look at this monthly chart on octa right here. So let me zoom in, right? So octa right here. Look at that. Boom, right there. Basically, that's the falling knife right there, right? So if we were to craft, put periods around this, right? Let's just say, uh, uh, let's do, well, let's just put, I'll put A and then B and then C, right? So these are the different motions of, like, I mean, there's also this one, right? We'll put 0. Right? 0 is like the phase where it's running up. And then A is the phase where it's topping out right there. And then B is the falling knife. So CrowdStrike and Dexcom are currently in B. So if you want to play B, you got to know what your style and strategy is for B because it's going to be very fast moving, right? B is like an elevated volatility environment, just as much as like 0 over here is an elevated volatility to the upside. So if you're going for CrowdStrike and Dexcom, they're at B. They just started B. Just started B. So you don't know if you're here or you're here or you're here or you're here in Dexcom and CrowdStrike, but it just started B. That's what we do know, right? Now, my not recommendation, but my opinion is, C is more soothing to play. The knife has fallen. It's flat on the ground. Another example that we just showed you today was Boeing. Boeing is at C, right? Right. We pull up Boeing right here. Let me pull up Boeing real quick. Boeing is at C. Give it 1 second right there. System's kind of slow. Please have wait. People have short memories. I bought Okta, sold one half, and rebought at bottom again. Still want to have an Okta party. Snowflake had similar dips. Yeah, exactly. Snowflake had the same thing as well. So look at this one, right? Again, falling knife, and then now I'm suspecting that this area right here is like C, and the volatility is kind of dying down. We need the volatility to go away. In other words, we need the attention to go away. Where people is like, oh, yep, that stock is dead. It's not gonna move anymore. It's not. It's boring. It's not popular anymore. It's not. It's not in the news. CrowdStrike is just in the news. It just got into the news, and it's global news. So yes, I think there's going to be negative sentiment all around that for some time. And so it's going to act as a falling knife until everyone's like, ah, this is boring. It's just, it's already beaten up. Then the long-term investors start coming in, right? So like Boeing kind of looks something like that. I know it's like very choppy still, but that's kind of how I'm viewing it, right? So very similar to Okta right here, right? Okta's at C. So again, CrowdStrike, Dexcom at B, Okta, Boeing at C, and then what's running up right now? What do you call it? IWM, Russell 2000, small caps are probably going to go zero, right? They're probably starting to run. And what's topping out at A? Maybe Nvidia. Nvidia's probably at A. All right, we go over to stocks over here. Kind of cool, huh? Kind of cool how we look at this stuff. Let me erase this. All right, Nvidia's at A. Right, that's why I'm looking at puts on Nvidia. So I don't know, but I've been rewarded on the put side this week, as we were talking about last week. So going into next week, right? I know this week we had a pretty hard sell-off. Was it Nasdaq down 3% on a day, if I recall, and S&P 500 over 2% down on the day. Again, don't forget about that, right? Bernard says people have short memories. It's true. The markets have short memory, basically. But I think the regular investors, the professionals, they don't have short memories. They remember the history. Um, so Nvidia, I am trying puts, but I think we probably bounce this week, right? I'm waiting for like a nice flush, but there's no reason for it to flush, right? It's a strong stock and a strong narrative right now, and according to the monthly, it's still uptrending. So this stock is still going up, but I'm trying to forecast like an early A, right? An early topping situation. Now, I mean, if we look at semiconductors as a whole, I think semiconductors have probably maybe topped out a little bit. But again, top out for how long, right? This is let's do weekly actually. That was pretty good. So this is SMH right here, and SMH represents semiconductors. So as you can see right there, right? So this is where we're at right here. I mean, you could say this is a pullback, like how we pulled back here, and then we tested the 20 MA. That could be a possibility, but we have to bounce here basically, right? We have to bounce here for semiconductors to continue. If we don't, then I'm going to start to get a little bearish, right? And we might do like a right shoulder over here, and then you got kind of like a head and shoulders, right? Reversal. So that's what I'm looking at with semiconductors, right? I think we bounce here because look at this. Let me show you on the 200-day moving average right there. But for me to validate this bounce, we got to get out of this trend line right here, right? So we got to start trade right here for me to confirm it. So I'm anticipating that might happen. So if I change the color for you, I'm anticipating. Let's do blue. I'm anticipating that we come out of that right there, right? That'll give me indication that yes, this thing wants to bounce, right? It's an interesting setup next week. Like I think last week I think we called it well, which is like, hey, I think negativity is coming based off of seasonality in the next 60 days, and I think we gotta get defensive here because the S&P 500 is up a lot, and so that was the move right there. And then now moving into this week, as the move has already happened, I think about the last 2 weeks, right? The last 2 weeks for semiconductors, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. Last 2 weeks we were up here, right? So it's been 2 weeks down, and the negative months aren't until August and September. So we still have 3 days next week until 31st, right? So I think we bounce. I think we bounce for the first half of next week, and then maybe we bounce until Friday, and then the week after next week, I think we got to get really defensive, right? unless I see something different, and I'll take note of it in my weekly reports. So that's what I'm thinking. Let me know if you guys have feedback on that. V says appears it is important for consolidation before considering to get back in from a falling knife. Well, to get back in which direction, short or long? Because long, but then long for how long, right? Because again, like Okta could also go down still, and then you basically have a bear flag right here, right? That could be a scenario. But then I'm looking at it from like, all right, what's the valuation? What, how much has it gone down? 80%. What does the company do? Is it Gartner leader? What's the technology? The leadership? Is the leadership still holding? Et cetera, et cetera. So again, it's case by case. Um, for the long term, yes. I mean, again, if you're bottom fishing, it's gonna like bottom fishing are stocks that don't go up. Like bottom fishing is basically falling knives and flattened knives, right? But stocks don't go up until it's clear that the knife is being picked up or the knife is taking a break at, like A, right? Which I drew previously. A, oh, yeah, I don't have it. Well, let's draw it again, right? There are phases to a stock, and we'll do like one, two, three, four, five. I always forget my stages right here, but you got your a year right here, right? 2020. This is a running stage, so I'm gonna just do A right there, right? I know we're changing the letters now, and then we have a sideways year right here. This is year two, so year two is B, and then look at this year three right here. Look at that, literally on the year 2022 at C, decline, and then now year three right here, we'll put D, right? And then now in the new year, I want it to be above here, right? So that it continues to progress to show me that it wants to rally. Then it's going to be A again. So A B C D, A B C D, right? So the question is, CrowdStrike is here, Dexcom is here, Boeing and Okta is currently here. Well, yeah, I guess. And then Nvidia is probably at B. And then what's at A? What's at A right now? We were at A, right? Like SMCI is at B, right? To make it easier, right? The market cycles, literally like that. So, man, I really forgot the stages. I'm so bad. A, B, C, D. A, right? B. Oh, so again, what cycle are we in with CrowdStrike? We're at, we just started D for CrowdStrike. And then Nvidia, I think we're at C, and I'm trying to kickstart, capturing the early part. But then again, that's very adventurous, right? You're gonna get your hand slapped if you don't do it right. And then what is that B and just about to take off right now? There aren't that many stocks that are trying to take off right now. Well, Boeing, Lockheed, okay, not Boeing yet, but Lockheed Martin, Raytheon, and GE Aerospace. Those are at B. It seems like they're at B, right? 8WM, Jatika says. What's 8WM? IWM. Yeah, I think you meant to type. Yeah, I see the I in the number 8. Yep, IWM, exactly. Right? IWM is about to run right here. But then again, like this is it's an index, so you gotta be careful as well. Right now, this right here is trying to run. So I am also looking at this next week on the long side, on the call side, if it plays out, right? Um, anyways, long term, yeah. Let's keep on looking stocks because this is where we practice and develop our eyes, right? Having a visual on all this is extremely important. V says this is valuable consideration where A could be bullish stage, B is sideways, and C is bearish. Yeah, I mean this is actually the book that Stan Weinstein, this gentleman right here, he came up with the cycle analysis or stage analysis. There you go. Sorry. So he did a really good job. Again, it's not my principle that I'm following. I'm following just what you could learn in the marketplace, right? So here you go. See, I forget my stages, right? Stage one's at the bottom. So really, it's stages one, two, three, four, and stocks move in stages one, two, three, four. So if we could understand the stages of a stock, then you could protect yourself. But again, it's not always going to look as easy and as obvious as this, right? But again, what stages or what stocks in, and we could do really well, like no joke, really well. Okay. Let's see what other stocks can we talk about? We talk about so IWM, right? I mean IWM looks fantastic. Like it's trying to move higher, uh, and it it looks good from like maybe a weekly perspective, right? If I pull out the weekly, right? Sometimes you just have to kind of flip the stock charts around multiple times to kind of get a feel of it, right? Now this could happen too, where IWM was trying to go higher and then it sells off and then actually goes down. So if we sell off from here, it actually becomes bearish again, maybe down to like 200 or 197 at the 200 MA over here. So there is a possibility. There's always a possibility that things could go down. It might look bullish, and that's true. That's correct. But you always have to just be. I learned that you just have to be ready, and you kind of have to like train for this, right? Be ready and train for whatever happens next. But yeah, IWM looks good for next week. I think that I will put that in my weekly report. If we look at TNA over here, again, if you want to play leverage, right? This is a 3x leverage right here, right? So this one uh, might explode to the upside this week. Um, because I mean, you could draw, you could slap a line in there, right there. It's coming out, right? It's pushing higher. We want stocks that push out higher. We don't want stocks that are a falling knife. Falling knives are hard. Well, okay, hold on. I mean, if you know what you're doing, I think it also gets pretty lucrative, right? Because Dexcom, maybe not Dexcom. Dexcom, I like the next week, quick trade on the long side. CrowdStrike, maybe there's a quick trade on the long side, and then I'd probably get out at 300, right? Hopefully CrowdStrike could rally to 300, and then I'd get out, and then I'd probably bet the other direction, right? More of a conservative put down play or puts play. Sorry, my screen's flickering. Not flickering, but all the pages are refreshing for some reason. Anyways, on to the next one. So Tesla, we looked at. Let's look at the rest of the fangs. How about that? And we'll get into the top stuff because we're about at the hour, and maybe in 15 minutes I like to dive into the report and chat about robotics if that's okay. So Facebook here. If we measure this from the top down, again, this is why I'm thinking next week we bounce because Facebook is down. It was down like 17, 18% right here, right? And earnings is coming up. So yeah, I almost forgot. Next week is also big on earnings. So that's why if you notice in the report, I didn't call a red light. I called a yellow light because there's earnings. And earnings could take it either way. So I think after this earnings period, we'll have a better visual. But what we do know is that moving into the next 60 days, we have negative seasonality, right? Or at least a tendency to be a negative seasonality in the next 60 days here, next 2 months. But again, this week, the last 2 weeks sold off quite a bit. Again, last 2 weeks. So I'm thinking, all right, next week, are we going to sell for another third week or we bounce? And it's still July. So I'm thinking we got to bounce next week. So I might hold my bias that way. But if prices starts to break certain levels, then I will revert and go the other way. Kevin says, I have to run, but thanks for a great session. Hey, you're welcome, Kevin. Thanks for joining as well. So this is Meta, right? Meta 50 MA. I think we bounce up to the 50 MA, and then the markets will test. But then we also have earnings, so I can't really say much. Technically, this is still bullish, right? We zoom out, it's still pretty bullish, but just a little concerning, right? That's all. Would be nice for it to correct a bit. Would be nice, but yeah, we just don't know. Nancy says, please remind me where to access your weekly recordings and reports. My weekly reportings. All right, sorry about that. Let's see, someone tripped the alarm. Probably the mailman or mailwoman. Let me see. Oh, maybe it was a bird. Sorry about that. To access it on my website, everything's on my website, enterpriseguy.com, or directly finviz.com. Because again, that's where I'm going to be building, my like the future of everything, right? The future for me is that I really want to get better at my analysis skills. So I'm going to be posting a lot more in this school platform right here. So it's free right now, guys. Again, there's space for 43 people left here, but right when we get to 100, I'm going to slap a $10 entry price. I think we'll hold it there for some time. But my vision is to build this out, educate myself in here by educating others, right? So the report that we're going to be analyzing shortly here is this awesome robotics report. After I analyze this today, I'm going to upload this in the report section right here. So we go in here. I basically built out different sections on fundamental analysis, crypto analysis, etc. I'm going to put into the research reports, so that way we can access all the reports. Because I noticed, like, you can do Telegram and stuff, but then like it's not really a convenient way to communicate, right? So I'm paying $100 extra now for this platform right here, right? I literally I'm paying $100 every month for this platform, so I have to build, right? I'm incentivized to build my education on it. So I'm going to be sharing like crazy, like all the learnings and all the things, and just to really develop myself over the next, however many years. But again, I'm going to lock it up at 100 people. So if you haven't joined, try to join when you can. If not, then well, you can join later, right? When I put a price tag on it. But that's how firm I'm going to be moving forward, right? Because it has to be people who want to work with me. If not, then that's okay. The internet has billions and billions of people, right? If you saw my reports from like what 2, 3 weeks ago, there's like what 5 billion people on social media and 100 million people, 120 million on crypto. So in the next 10 years, imagine 1 billion people in crypto. Ooh, that excites you, huh? So you gotta go find people who kind of know the space in order to make the right bets. Well, that's what I'm after right now because I think there's massive opportunities there. But you gotta train with someone because you will go through the trenches together. I'll tell you that. There will be cycles of ups and downs and ups and downs. So that's where I'm going to be building next. All right. Sorry, a little bit of a plug right there for folks who haven't got in yet. We could go over to the next stock. We were just looking at Meta. Let's look at Apple, right? Apple, man. So Apple's pulling back now, but that's fine because it was running up quite a bit for quite some time. So if we look at Apple, right, look at this. So before the drop right here, right, I traded this one all the way through as well. Um, like even up here, right, at the 220 levels, right, I was playing it all the way up until like 230, and I was just thinking like, dang, this thing just keeps going up and up and up. But now we got like that break of a trend, right, break of a channel, and then break of a trend line or moving average line, and then now it's starting to go down. So this one's I know earnings is coming up. It's looking currently a little bearish or reversal. We might sell down and earnings might take it up. But it seems like I think the big money of the world has spoken with Apple and they want to push this market higher. So I think after we get through this 60-day bad period in the next 60 days, I think 2025 is going to be a big rally. Maybe, right? We'll assess as we go, but I think we're moving towards a really big rally. But then at the same time, if rates go down, right, it's also like very mixed signals at the moment. But let's see. Let's try our best to forecast. Lost all my winnings on Apple this past week. Oh no. Well, Apple right here. I'll tell you this. You see where my arrow's at, Nancy? The black arrow, not the blue arrow, right? The blue arrow is like go long, obviously, but this black arrow right here, that's actually the short. The signal to go short. I mean, you had like three areas to cut your loss, right? I think we talked about this in the last 2 weeks. Like that arrow right there was a sell. Well, hold on. Let's talk about it. So this arrow, the break of that channel is a sell. Break of that 10 MA is a sell. Break of that 20 MA is a sell. And then break of this 220 area is also a sell. So 4 reasons to go short right there at those 4 arrows. 1 reason to go long right here. Well, I mean, there's several reasons, but I only have one arrow right there. Right? One big reason to go long, and then 4 arrows to go short right there. Any thoughts on Biden dropping out? Does that make any impact going forward? Yes, I think it does. What I think about it is, okay, I'm not gonna side anyone like, Biden, Trump, or whoever, right? But what I'm looking at it is objectively. So, now with him stepping out, new person stepping in, it creates what? What do we know is a guarantee here? Let's think about it for a second. What do you think is a guarantee here? The guarantee is uncertainty, right? So there's uncertainty, I think. So again, I'm trying to. I know markets respond to sentiment and narratives, right? And so I have to think about what is the current sentiment and what is the current narrative. And I think the current narrative is we could maybe conclude it with one word, which is uncertainty. Who's going to win or whatever, I don't know. But just uncertainty. So uncertainty is essentially negative, right? I don't think it's a positive thing. It's neutral to negative. So I think it does impact it from adding uncertainty to the marketplace. in a marketplace that has been topping out a little bit in the last 2 weeks and approaching negative seasonality in the next 60 days. So, okay, I like the narrative there. Now I'll be looking at stocks that are really extended, like Nvidia, and seeing if Nvidia, being a market leader at the same time, if it cannot hold, if it tries to turn around, then I might want to put it down. Try to put puts, buy puts and put it down. That sounds funny. Put options on it, right? Um, that's what I'm thinking. But if we look at what else? I mean that's my thoughts right there, Bernard. Right? It's always good to do the bigger picture analysis so you calibrate to what I'm seeing at the macro level, and then we start uncovering the onion or analyzing the different layers, right? Because right now, when we look at an individual stock, we're really looking at the center of the onion, but sometimes we want to zoom out and look at the onion as a whole, right? So thanks, I agree. Election will have no impact for months. Yeah. So again, the things are 2 weeks ago. I know you weren't here, Bernard, but 2 weeks ago, I think it was 2 weeks ago or a week ago, S&P 500 was up 19%, about 19% year to date and approaching negative seasonality, right? According to our quantitative seasonality back test. And market leaders were topping out. So like Nvidia, the Fangs, Tesla. Well, Tesla was still holding up, but now it's down on earnings, right? Things were just slowing down on the larger cap side. But the Russell 2000 is looking pretty good. So it's not all green, 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 green. It'd be nice if like everything was green and I'd be like really confident on Russell 2000. But we have a mixture of like topping, yellow, red light on the large cap, green light on the small cap, and then political uncertainty plus international conflict, right? At least like the aerospace and defense stocks are showing that or indicating that. So how do I want to bet then, right? Is what I'm looking at for next week. So I think based off what I just said, there is a fantastic list of like trades on both the long side and the short side. And I think lately, maybe in the past year here, I got really comfortable on the put side. And so now I'm just so much more excited. Like, man, it's so fun now because like there are some you could actually structure and I'll talk more about it in the FinViz club if you guys engage with me, right? But if you know how to structure your options contract, like man, like like even just $1,000 bet, right? And like I'm willing, like I'll bet I was betting 1,000. I think it was on Thursday or Friday. Let's review that trade. I was in Nvidia. Let's review a trade with you guys. And I had 1 day to expiration or 0 days to expiration, right? And this trade right here, I'll show you. So was it? It was either that one. It was that one. Yeah, it was that day. This day I played well also. I played really well that day. But this day right here, this is the one I'm talking about. This is the day right here, right? Literally in 5 minutes, right? Literally 5 minutes, a $1,000 position went to $7,000. Just that one candle right there for me, right? Just a $1,000 risk on the day, and I'll lose it all, right? And basically, you capture a really good move, 1,000 to $7,000. I kid you not, right? But you gotta be fast. You gotta have fast hands on this. So very very lucrative. Imagine if like you did $10,000. Imagine if you did $100,000. I mean, assuming there's enough like volume, right? But yeah, that's newer emerging games that exist in the marketplace. Again, zero days to expiration options. It came out in like the pandemic, like 20, like it got really popular around the pandemic time, like 2021. But yeah. Okay, so did we talk about Nvidia? We were talking about Apple. Let's go look at Amazon, right? Let's start looking at the core of the onion over here as we different look at the different layers of the onion. So we look at Amazon over here, right? You see this? You see my arrow right there? It's below the arrow. So where's it below, right? What happened here? You see the massive amount of volume right here, right? So remember, things tend to explode away and gravitate towards. So it exploded away, tried to explode away, but failed, and a market maker was like pinning it at 200, failed, and then came back, gravitated back to this liquidity pool right here. So, as long as I guess it's going to stay here until earnings, but really, we just got to watch earnings next week. That's the catalyst for next week. It's really earnings. Amazon, Netflix. Let's look at Netflix. Netflix, Google. We'll look at some of the top stocks. I actually do want to dive into report, but you guys let me know. Looking at Netflix right here. So this is Netflix right here, below the 50 MA, right? Again, I take note of this every week in my report. And then the one sitting on the 100 MA right there, sitting on support where I drew support right here. So support, if support breaks this week, then it probably pushes lower. Right? I don't know how much lower, but that's what I'm looking at for this week for Netflix. Google, earnings gap down, negativity, broken leg maybe. Take a look at it. Let me show you in a bit. I have too many windows open right now, that's why. So this is Google right here, right? I know, I mean, it's not always going to be perfect, but earnings cause it to go below this pink line, below the 50 MA, and then now we're at the 100 MA, right? So it's like you almost like only have like literally like a day or two to capture the trade if you're doing active trading. But what happens now is that now we're at the 100 MA and we held it on Friday. There's a good chance that we bounce, right? The question is like how high? We could bounce back to this pink line right here, and then the seasonality of what do you call it? August, September kicks in. Then we start to decline. So there's trades on the upside, then trades on the downside, right? Like you could just focus on the fangs, like just trade fang options. It makes makes things a lot easier. But yeah, that's a possible scenario for next week is what I'm looking at. Maybe I'll keep that there, but it's going to be annoying on my charts. I'll keep it there because that could be the case. So I am anticipating a potential bounce next week, and that'll be the bias. But then after the bounce, then I think we continue the decline, unless this bounce proves me wrong and goes higher. Again, you have to look at the S&P 500 for that, which we haven't reviewed. Microsoft, all right, top shelf stuff right here. Let's look at Microsoft. Uh, Microsoft right here. There we go. Uh, Also sold down quite a bit, right? We measure the top, measure it, and be like, all right, it's already a 10% drop. You see what I mean? Like if it was down 15%, then it increases the probability that investors are going to come at this because like, oh man, Microsoft's down 15%. So in order for it to get to 15%, it's going to be a process, right? It has to bounce up and test more levels, and then eventually you get the 15, 20% correction. So right now, I think across the board, we're really just at the fangs are really just at like a 10% correction, and I think we're going to bounce at a 10% correction, and then maybe have resistance at a 5% pullback, right? If that makes sense. But yeah, I think there's a chance that look earnings coming up, it could gap up, but then we don't make a new high. So that one's in the way for next week. Tesla, we looked at Nvidia, we looked at AMD. AMD is just right? Just down because I had calls on these. It didn't work out. Not last week, but prior to the decline. I had calls at 180 over here. I was playing calls on this, but this one went a little too quick for me, and I was like, darn. But that's okay. This is how we you live and you learn, right? So this is looking very bearish, right? But it's also quite extended. So I think maybe we get again if for a day trade, if we gap down, then at the open we rally a bit. There might be a quick trade there. But earnings coming up as well, right? Earnings is in the way this week, which is fine. It brings more volatility. It brings more premium, uh, options premium. What else? What else? Shall we dive into the report, or do you guys want to do a quick macro assessment real quick? What are you guys feeling? Because I do want to save time for the report. Macro? All right, let's do a quick macro. So again, now that we know, quick macro, Bernard says. So now that we know, what stocks, the fangs, how the fangs are performing, stocks like Dexcom, thanks to Bernard, down 40%, or CrowdStrike, down quite a bit from negative narrative. And then we saw the fangs I mentioned and how they're down like 10%. Looking at the S&P 500 right here, we see that we've held the 50 MA. You see that we sold down and it got really bearish right there because we were under the 50 MA, but now we're back above the 50 MA. So as we're back above the 50 MA, right now I'm thinking like the markets could potentially bounce. bounce to the next resistance, which is right here, this red line right here. So S&P 500, we could bounce to 550 next week and find resistance at 550. If we bounce and we go over 550, then I think we start to recover. And if we recover, then I start to look long again and just consider this as a blip. But the problem is the next 60 days, it's just we ran so much already, right? Year to date wise, we're up 14%. So maybe we sell off another 5% and then we close the year at up 18%. But we know the average for S&P 500 is 10 years. But we also know last year, let me see, last year was a down, well, last year was like sort of an up year, but the year before that was a down year. So we're going into our second year of upside. Here, let me, too much annotation. So last year, not last year, 2 years ago, 2022 was the bear market, essentially, for tech, really. And then last year, 2023, right, we went up. We got out of it. And then 2024, we're moving higher. So if anything, we probably come back down. Like even this is a support level. Prior resistance becomes support, right? So even like 470, 481 right here could be support, and we could come back down. That's healthy actually. In which case we move higher in 2025. Very possible, based off like the allocation of money that I'm seeing here. Right? I feel a lot more bullish and I feel, I'm bullish on inflation. I'm bullish that my coffee is going to be like 10 bucks. As a matter of fact, I spent 10 bucks on coffee last week and I hate myself for it. I went to that new Vietnamese coffee place that just opened up. That's like kind of like, was it like something Legend Coffee? It's like Trung Vietnamese Legend Coffee, and it was just like the most ripped off like price ever. I'm like, I fine, 10 bucks for the experience, sure. Um, this it's like Trung Nguyen. Uh, it's funny, I'm Vietnamese, I'm pronouncing it, but this fancy Vietnamese cafe opened up, and I went there. It's not this one, by the way. It's in San Jose. And man, they're charging 10 bucks for coffee. And I'm just like, all right, this economy's going on overdrive mode right here. Like this is just insane. And it's just it's weird. Like, I drive, I'm driving around. I drove next to KLA 10 core and I saw like two homeless people. And both of them for some reason, like one guy, I saw his butt. Like he's just walking, street light with half his pants down. And I literally saw butt cheeks. And then another guy, right, when I drove around, he was just like in the middle of like the highway, like the sidewalk before the highway, and his hands was also in his butt. Like, and I'm just thinking like, wow, what what's going on over here, right? Coffee prices at 10 bucks and like two people, butt cheek actions in like the same weekend. It was the same weekend this week. So, and homeless people in a neighborhood where, next to like a fancy corporation, like it's just I've never seen this before. So, yeah, you gotta learn how to invest, I guess. It's not a choice now. It's really not a choice. I think if I didn't invest, I'd probably be out there picking my butt too. No, I'm just kidding. Sorry for the nasty images. But anyways, let's see. Let's look at SPY, right? Oh, I'm sorry. We looked at SPY. Let's look at QQQ. Bernard says you can still buy a burger in LA for $27 and another $10 for fries. I think you're being sarcastic, man. But I mean, dang, 27. I mean, I feel like the plate for real, he says. Uh, Tej says no AI also could ever draw the analogy between coffee and cheeks. I know, right? I mean, eventually, like to counter AI, right? Because like if you know what AI is trained on, which is like humanity's text base, I'll just have to start speaking in like another language or something, right? And just start confusing the AI, like cheeks and coffee, butt cheeks and coffee. Um, but yeah, Nasdaq right here. So Nasdaq sold off quite a bit more. Look at this. Look how deeply this is quite a bit right here, right? And we're at the 100 MA. So this is why I'm thinking we might bounce because like I'm just like, wow, we sold off quite a bit already. Like we're talking about correction. We just had a 10% correction, guys. Nasdaq is down 10% from the highs. We literally just had a 10% correction. So I really think we there's a possibility that we bounce here, and then the following week we continue to decline, right? Or correction. In which case we correct like 15 to 20%. Because I think this might be that one. I don't know. So next week, yellow light, imminent bounce is what I'm thinking in terms of forecast. Yellow light with an imminent bounce. There's a good chance of a bounce next week. And I want to, and if I know that, I want to play these bars. I want to play these candles, right? Because like I said, like 5 minutes, 1K to 7K, if you get a really big move. So yeah, day trading is very lucrative, but you kind of have to have the energy for it. And so I'll talk more about it if you guys want more day trading. If not, then I'm just going to continue to share like for example right here, right? This is a good one right here. So NVIDIA insider transactions, I shared this one right here. If you look at NVIDIA, Jensen Huang right here, right? In last July 24 to June, he's been selling shares. Let's go actually look at this. He's been selling shares since June 25th over here. Now, first of all, how do I look at this? Let's actually teach you guys. So let's go to NVIDIA right here. And what you do is you just scroll down. So on FinViz, right? We go to NVIDIA. And again, I want to do more analysis like this because I think it's going to be a lot more fun when we level up. We go down, all the way down right here. And you can see Jensen Huang, right? Like when did he really start? June right here. Now before June, right? May, you didn't see his name, right? No Jensen Huang in May. Last time was September 2023 when he was exercising his options over here, right? These are options exercise. So Jensen Huang started selling of NVIDIA. He started selling right here in this day right here, right? That's the day right there. So tell me if you guys see any earlier date. He started selling this day. Oh, shoot, where is it? This day right here, right? We're going to hold that day. 13th, right? June 13th. Let's go back to NVIDIA. June 13th was when he started selling. Let's go into here. Let's go into daily because that wasn't too far ago. June 13th, right? He started selling on June 13th. That's June 20, June 13th, right there. He started selling right there, June 13th. That was his first tranche, right? Go back down. Sorry, I'm going up and down. June. Hold on. Did I read that right? Yes. June 13th, he sold a tranche and he continued to sell all the way through June. And then he continued to sell all the way to July. So July 24 and June 13th. So let's highlight where he sold. Uh, so he was selling from June 13th, which is right here, all the way to July 24. That's just like not too long ago, right? Hold on. Yeah, there you go, right there. So yeah, he's been selling this whole entire period right here. What did Nvidia do? A lower high. You see my pink line? A lower high. So to me, it's like, dude, this guy's selling, right? So I want to play puts on this because I think the near-term direction is that it's probably going to decline a bit, and it could go down to the 100 MA, and it could be really lucrative. So I've been trying to hammer puts on this. I'm in and out quite a bit, but yeah, I think there's opportunities on the put side because the guy's selling. The guy's been selling basically right here, right? And then this one had a parabolic peak right there, and then big red day right there, and then he continued to sell all month for the next 30 days. So why is he selling? Well, you zoom out, right? You zoom out, and he was selling up here. So let's correct it a little bit. He was basically selling. Hold on, sorry. He sold at this day right here, June 13th was what price? 130, right? 130. So let's correct when he started selling. He started selling at 130. Let me show you when he started selling. And he started the reversal. He literally started the reversal. And these are things that we want to pay attention to, right? He started selling at 130. And ignore this wick right here because that wick didn't exist. He basically started selling right there. Right there. Right? So in other words, ignore everything red and above. Ignore that, right? We'll erase that. That's where he started selling. And then we went up maybe another $5, $10, I'm sorry. And then it's starting to slow down, right? So look at how parabolic this is. I think it's going to go like that. I think we're going to revisit 100. And 100, it's at 113. So that's like $13 move. That could get pretty darn lucrative if you nail that, right? So again, nothing goes up forever. AI for this company already ran 1 year, 1.5 years. This is a 1.5 year run. You think it could run for another, half a year? bet on it. I mean, go ahead and bet on it. Like I think that it's going to be a hard bet because it gets a little bit more extended, which is fine. Things get extended, but extensions are opportunity, right? This could definitely go higher. And if it goes higher, it gets even juicier. Like if it goes higher, you might just see K like just like drooling everywhere. So yeah, that's what I'm thinking for this one. Um, right? And it's sluggish right now. Give it time because when the sluggish kicks in, all the people over here they're up a lot, right? And they don't like watching their portfolio go in the red. And after some point, it's gonna get really red, and then they're gonna be like, "Oh, I don't want to sell." Nancy says, so are you also saying if there is a bounce to all the fangs this week with earnings reports coming out, would you advise to do a major sell-off at week's end of fangs? Again, I don't like to advise in here. It's just education. I'm here to learn just as much as everyone. I'm just doing it a lot more openly, right? Because I realize like that teaches me like even better when I teach and articulate this stuff. Articulation is really powerful, by the way. But in my opinion, what I think is that next week we're going to bounce because the Nasdaq really, I think the Nasdaq really was what gave it away for me. Is that it's a 10% correction, right? A major technology index or Nasdaq index is down 10%, right? I mean, we still got a ways to go, by the way. And you know what? Do we have a Nasdaq seasonality? Let's look at if we do. I might include that in the report. Let's do seasonality Nasdaq. I think we do. Ooh, we do. Oh wow. All right, we do. I'm excited. Yes, your edutainment info to us rather than advice. Yeah. So, so the Nasdaq, right, typically does about 14%. So Nasdaq has a tendency to outperform the S&P 500. Now look at this, right? So Nasdaq has a tendency to correct more so in September. Look at that. Oh wow, we should really include this in future analysis. This is actually really good. We should even look at the IWM seasonality, right? I mean, we're talking about 30-year back test here to kind of give us investors like some sort of like, like a fuzzy crystal ball, as Bernard likes to say, right? So it's a fuzzy crystal ball for us to gauge like how much higher can it go. But just remember, right? Look, first 3 months of the year outperformance, and then April right here, 1 month of decline, and then the next 3 months outperformance. Then right now we're seeing a slight correction, starting with the S&P 500. Well, I'm sorry, starting with the Nasdaq, but I was analyzing it more from the S&P 500. But now I think, we're moving into these tough months right here, right? I like this. This is actually really good. So to answer your question, Nancy, I mean, I'll have better data by Friday because I will see what earnings is going to do next week, right? It's just so hard to really forecast that. Like, I know it sounds, well, it shouldn't sound crazy, but like some of the stuff it's just better when the data is there, and right now the hardest part is the earnings data, and I'm showing you right now. Next week, oh, not this week, that was Google. Last week we had Google and Tesla, but for this coming week we got the biggest earnings of all. So this is where I think this week we'll really know if the fangs go up or down, right? Now hold on, even though we got Apple, Microsoft, Amazon, and Facebook reporting earnings this week, big earnings, AMD also, and ARM also, right? We could very much go up, which is a good thing because now we will get more confirmation if this market could go higher or not. So we might try to push up, slow down, and then that's like massive confirmation that the next 60 days are going to be really bearish. So I think the best next data point or forecast that I might be able to have is going to come next week. I'll have way better forecast next week based off of like, all right, let's see how because what I'll know this week is if the fat money is buying more Apple, Microsoft, and Amazon and Facebook, or are they getting scared and they're selling off. That's what I'll know this week. Something tells me that maybe they'll buy more, right? Something tells me that they'll buy more, so we'll see a gap up, and then post gap we start to fade and we fail, we roll over. Then that tells me like there wasn't enough buying, even though there was intent on buying, right? So that's what I'm thinking in terms of market dynamics. Tej says, what's next for NVIDIA to go up? Is it just more contracts and partnerships with large AI solution providers, or are we looking at new innovation announcements like improved chips? Otherwise, it seems like NVIDIA growth is already factored in for the most part. Yeah, and then also at the same time, right? If the equity prices appreciate too much, then you got a bunch of employees with golden handcuffs who are like, man, I'm already rich. I just have to be here for 4 years, right? So yeah, it's gonna be tough, but um, that's I don't know. I mean, I would just look at the chart and just see that it's been running up for a year and a half. So I think again, if anything, okay, if we're talking about the long-term health of Nvidia prices, is actually very healthy for it to correct. It's like a humbling correction, and it's because anything that keeps going, it becomes extremely unsustainable, right? Like even Bitcoin, like it's good that Bitcoin corrected, and now that's like the hype. There's a lot of hype right now. Like Bitcoin's probably going to go a lot higher. I mean, you got politics talking about Bitcoin. Let's say it one more time. You got politics talking about Bitcoin. You got the world's largest fund on the planet, BlackRock, promoting Bitcoin or, believing in Bitcoin now. So if that's the case, the moment that they bleed into or start believing in Bitcoin, then you have all the other tokens and stuff gathering interest as well, right? So yeah, quite a bit of things to see. I have a new. Oh, why are these people messaging me? Sorry, guys. Um, so Bernard, I know you texted me. I was looking at my messages, but sometimes I get messages and I'm not able to get back to people. So if you guys message me and I don't get back to you, hey, like don't think of it as anything. Just message me on the. I'll be here. Like this is where I'm gonna centralize all the chatting and stuff. So hang out with me here. I encourage it because that's also what I'm promoting. Full honesty, right? Real mature investor education for the long run and developing the experience together for eventually a cheap price of $10. Right now it's free. If you're not in, well then $10 later. That's not too bad either. Okay. Let's go into the report. How about that? I gave you guys the macro. I think looking at just the two indices is pretty good already. We can look at the full macro. Hello, chart master. Sorry I got delayed. No, there's no chart master here, Baroth. I'm just, doing my homework here with you guys. Also, like you can look at the Nikkei, right? The Nikkei also another global index out there. Japanese or Asian markets over here, right? Sold off quite a bit as well. Again, to levels where I think the markets will try to make it bounce. So if the markets overall globally try to bounce, then yeah, I think it'll help the Fangs bounce this week. And if that's the view for this week, then you could craft some long-sided, 1 week to expiration option contracts and stuff like that. So that's how I'm viewing it. So yeah, so this is it right here, right? Break of the 50 MA, but we need to come back up a little bit because it's sold off quite a bit. We measured the move from top down to see how much of damage we did. 10% correction, right? It's like across the board, like Asian markets, 10% correction from the highs, not for the week, but from the highs. Nasdaq, 10% correction. Euro Stocks 50. Let's look at European markets. Measure it from the highs real quick. This one I think is not at 10%, but technically this is the highs. Is down 6%, right? And then VIX is still elevated. So VIX will probably come down a bit. But again, the rules that I have right here, VIX, again, this is in my report every week, right? VIX over 15 is not good for swing trading. So VIX less than 15 is good for swing trading. That's low volatility. We're slightly in elevated volatility here. And then where's my red line? Oh, right here. There you go. 30 is like typically max volatility. If that's the case, then that's where potentially buy the dip or maximum fear. That's in other words, 30 is like when Warren Buffett likes to say you want to get in when there's blood in the streets, right? I think what are the phrases? So 30 would be max or very heightened volatility, and like be very careful. But that's also like when the best trades come. Um, that reminds me of who was the person that said this really good quote? Like there was a really good quote that I can't remember. I think it was Howard Marks quote, opportunity. Like it was a really good quote. You see, this is why we got to post it um, in the Finviz Club, right? It's a really good quote. Um, oh man, I don't know. Buying something is less value. Oh, that's gonna bother me. It's a really, really good quote. Okay, anyways, I'll have to circle back to this one. We got 30 minutes left, guys. Shall we dive into the report and call it a day? Because this is not a basic report right here. This is like a sophisticated report. And I'm gonna pass it to you guys in the Finviz Club after. Very sophisticated report. It's by Coatue, and as you know, it's not tiny. So let me pull up on the screen over here. Let me show you their portfolio, right? All the cool things that you guys get to see with all the tools that I, decide to subscribe to and try to do weekly due diligence on. Check out Coatue here. All right, let's look at their portfolio. They're managing, right? Right, this is a big name in the industry, by the way. 25 billion. At least whatever we see right here is 25 billion. Pretty sure it's much more than that. But we go in here and we arrange it by the weighting. Let's see what they got in the portfolio over here. Give me 1 second. So this is how a $25 billion fund is. Man, look at that. Oh my gosh. 8% exposure to this. Look at that. Isn't that crazy? Sorry, this thing's in the way. There you go. 8% exposure to that. Look at this. This is a tech portfolio over here. All right. This is why I track the FANGs right here, because some of the biggest players on earth, they just have to buy it. They when you have this much money, like just wait until the day Bernard's a billionaire. All right, Bernard's gonna be calling me and saying, Kay, like I got way too much money. Like we got problems, man. Kay, I got way too much money and I don't have all the hands to deploy it. Like we have to keep deploying these and gathering the contracts. I can't scale any higher. If I do, I'm overexposed. Yes, and awesome daily parties at K's. This guy. So let's dive into it, right? So we're about to analyze a $25 billion, at least whatever's disclosed right here, how they view the world, how they manage money. Let's dive right into it, right? So disclaimer, again, I mean, not written by me. I'm just analyzing some stuff on here. But key topics, past and present. What is robotics today? And by the way, I'm reading this for the first time. This was passed to me by a friend earlier this morning. So again, first time for me. Past and present. Where is robotics today? Let's take a look. The curse of robotics today. Demos are not always reality. So robots get it right for a demo, and then after many times failing in reality over here, it says. So we've probably seen this Boston Scientific video where like the robot's doing backflips and stuff, but there's probably real ones here. So we won't watch it because we got 45 slides to go through. Robots have been in the field for decades, since 1961. First industrial robot delivered to GM. 20 humans, equivalent estimated output of unimate. I never heard that word before. Unimate robot, Unimate robot. I don't know. In factory welding, right? That's how bad my English is. Home robots have been around 50 plus years for niche use cases. So 1958 over here to, well, I haven't seen this one, but pool robot. 2002, the Roomba. 2014, this one is the grill cleaner, right? And then 2020, oh, look at that. That's pretty cool. 2020, right? Robotics adoption has been linear historically. So linear. So industrial robots, linear. Home robots, iRobot cumulative shipments, right? So just a stat out there. Many robotics startups struggled with commercialization and costs. Examples of robotics projects that wound down operations. I thought this was like exactly for a second, but it's a different brand. Possible factors that led to failure. So number one, struggle to bring useful robots to the market. Okay. Number two, difficulty finding early adopters in core segments. Number three, tough unit economics given high upfront capex. Robot hardware has been rapidly developing across form factors. So collaborative and traditional industrial. So, okay, 1 million plus. Autonomous mobile, 120K plus shipped in 2022. Drones, 1 million plus. Quadrupeds, 3K dollars, $3,000 robot starting price in 2024. So you buy one of these for 3K. And then look, humanoids, 20 plus companies building humanoid robots from 2013 to present. Right. So I mean, look, Elon Musk has the flex and the influence to make this happen. Like I'm telling you right now, I think eventually we're all gonna want a humanoid. Like in the future, I'm gonna call Bernard to hang out. Let's go get coffee, and Bernard would say, "It's okay, Kay. I'm gonna hang out my humanoid today." All right, I'm telling you, the guy could influence to make it happen. Right? Look at this. So this is this is the recent Tesla earnings right there, right? Earnings shareholder deck. So in other words, I joke, but what I'm trying to say is that just as much as like the laptop, the phone, the desktop, the car, right, has been very important to us in terms of like our consumer technologies. The humanoid is probably next. Maybe right now the quadrupeds right here, but I mean the drones are definitely here, in the VR and stuff like that. But humanoids, yeah, I could see that happening. We believe the path to general purpose robotics is AI. All right, tell me more. Available now is single purpose robots, where they do just single purpose things, right? Pre-programmed for specific tasks. But in the future, general purpose robots, adaptive learning for many tasks and situations, right? So like I said, there's many reasons to hang out at home with your humanoid, right? My humanoid could guard my front door, let's say. We expect spatial AI models to accelerate generalizability. So now we're talking about spatial data, right, to power spatial AI. Things to pay attention to as we analyze out there. By the way, I also shared some cool Gartner stuff in the Finviz Club stuff. I share a lot of goodies in there. As LLMs enable language reasoning, spatial AI models enable physical world reasoning. One more time. As LLMs enable language reasoning, spatial AI models enable physical world reasoning. So LLMs over here is text only, right? So models learn relationships between words right here, and then reasoning over text-based queries right here. Maybe I'll make this a little bit bigger for you guys. And then down here is spatial, and can we close the left side? Probably not. Let me refresh this one more time so we can get the left side in. Sorry about that. There we go. Just had to fix that real quick. Okay, there we go. So over here, spatial AI models, multiple modalities, right? Everything from sound, visual, maybe taste, uh, touch. Model learns relationship between physical objects, right? So probably a lot more demand for these vector databases. Reasoning over physical interactions. All right, let's keep going. Key topics: the dawn of a new era, general purpose robots. Uh, that's coming up. Many tasks that are easy for humans are hard for robots, right? Such as one, dexterity. Two, spatial awareness. This is hard for robots. And then three, recovery. Data scarcity is currently a major bottleneck for robotics AI, but that's about to change, right? So what do we know? Text modality. 15 trillion tokens, OpenAI GPT-4 here is an example of the AI model, right? Largest data set size. For image, you got Midjourney. Man, I use Midjourney all the time. 6 billion image text pairs right there. Video. For video, you got Runway. Oh wow, Runway's up here. Oh, this is their portfolio company. Of course, they're going to promote this. 2.6 billion audio visual features, and in robotics, 2.4 million episodes. Not enough for general purpose AI model just yet, right? So open research has accelerated progress. What does this mean? Let's take a look a little bit closer here. So research publications in robotics showing select examples. Attention is all you need. Zero shot visual imitation. Again, this is open research, right? OpenX embodiment, robotic learning datasets and RTX models, and then mobile Aloha. All right, let's keep going. That spectrum's a little bit more technical for most folks in here. Several data collection. Oh wait, is this interactive? Okay, several data collection approaches are promising. Teleo operation. If I click on this, how will it play? Does it go to YouTube? Oh, it does go to YouTube. Sorry. I don't. Let me see. Let me go back. Maybe close it out. Uh, let me see. Let me see. Where is it? Aloha. Why is it my downloads? Give me 1 second. There we go. There we go. Boom. It's called keeping privacy over here. All right. So we won't be able to play these, but that's okay. Let's go. Several data collection approaches are promising. We'll have to watch this later, but it seems like he's just using his hands and then he's doing robotic stuff over here. Several data collection approaches are promising. So AR data, augmented reality data, so low headset usage, right? Again, this is more like Facebook's headset. And then over here, simulation. So several data collection approaches are promising. Simulation. Again, just gap between simulation and real world translation. And then this one over here, several data collection approaches are promising. Video learning. So in early research. Got it. Let's keep going. GPU costs have dropped, leading to cheaper model training. So A100 spot pricing on Azure, dollars per hour. Spot pricing, huh? Man, it'd be cool if like eventually we could trade like, there'd be like an exchange eventually for like trading compute resources. Like how you trade commodities futures. Can't wait to like trade like compute futures. That sounds so cool, right? Man, because like I mean, it's not big enough. I mean, maybe there's not enough vendors. I don't know what structure we need, but to have compute futures and data futures, that'd be sick in the future. Yet to come. So cloud providers do that today with spot pricing. They do, but they kind of have a monopoly, right? Well, spot pricing, but then like you got AWS with spot pricing, but they are their own supplier and controller of spot pricing. But then is there like a mutual exchange between like the three, four clouds to do spot pricing? That's what I'm curious about. Robot components are expected to get cheaper. So L3 LiDAR sensor costs are going to go down expectation wise. Humanoid coreless motor costs, so also going to go down. That's the expectation. What other trends could we do we know? Robot components have gotten better. So battery costs down, battery energy density has gone up. So battery performance and the cost has gone down. Performance gone up, but cost gone down. Overall, humanoid hardware costs expected to dramatically decrease. So humanoid component costs one time versus human wage annual. So cost of humanoid one time is going to go down, right? So right now, 2024 is like 100K, but eventually it's going to go down. And then U.S. wage. So they believe that the inflection point by 2027 almost, right? People are going to be able to afford a humanoid in the next 3 years. So U.S. wages over here, right? U.S. wages needs to go up like that, but it's not going to happen. Some humanoids today operate faster than humans. So humanoid walking speed. So what are we talking about right here? Walker. So these are the different humanoids out there and their average walking speed, right? So the average human walking speed is right here, and then this one's 3.3. What else we got over here? Human-like dexterity is on the way. So this probably showcases like the hands and stuff like that. More humanoid initiatives are emerging. What else do we know? So Boston Scientific 2013, but Toyota has an initiative. UBTech has an initiative. These companies have an initiative. Any companies that we know? Tesla, of course, 2022 getting into the game. So yeah, the trend is you're seeing a lot more initiatives emerging in the humanoid space, right? The semiconductor industry, they love that. More workloads, and then the AI workload and all that. So yeah, I think there's so much industry reasons to sell the consumer on having a humanoid that is multitask and multimodal in like intelligence, right? Very, very, very much so. And Elon Musk has the influence to potentially push that, as we know. In that case, now we know the trajectory of Tesla's price, as long as Elon Musk is still alive, that is, right? Because he's really the showman, right? Um, we expect humanoid autonomy to accelerate as with AVs, autonomous vehicles, to accelerate as with autonomous vehicles. So what is it saying? So level of autonomy, L5 all the way down to L1. L1 is cruise control. L5 is fully autonomous. You got highly autonomous over here, self-driving with light intervention. Tesla autopilot is L2. So L5, fully autonomous, generalizable across tasks. Highly autonomous, next 5 years. So next 5 years we go to L4, highly autonomous for most tasks. Again, there's Rivian and Lucid. Those are stocks that we want to watch that could be potentially in play later down the road. Advanced locomotion and some dexterity, and then basic motion over here. Awesome. Let's continue real quick. We believe hardware robustness will enable extraordinary abilities. What are they talking about here? Robotics exhibiting increased durability, so you could kick it and push it around, and increasingly able to do more with better hardware. Okay, that's obviously going to come. So like vision and stuff like that. It looks like it's showcasing. And then superhero level humanoids next. Oh, please, not yet. I'm not ready for that one yet, but that it would be cool, but it'd be intimidating as well. Let's continue here. There we go. When is the ChatGPT moment for robotics? Let's take a look. So the ChatGPT moment for robotics is coming soon? Question mark. About the ChatGPT moment for robotics. Things might get very interesting in robotics in 2024 and beyond, says this person. Robotics ChatGPT moment, all right? Is robotics about to have its own ChatGPT moment? Let's see. We just had an AI breakthrough in our lab. Robotics is about to have its ChatGPT moment, and that moment is happening tomorrow. Okay. Silicon Valley really, really wants robots to get their ChatGPT moment. Robotics needs its ChatGPT moment. All right. All right. It's headlines over and over. Three big wow moments in technology. In the last 20 years, right? 2007, iPhone. 2022, ChatGPT LLMs. 2024, autonomous vehicles. Well, I guess. And then robotics over here, right? Coming soon. The characteristics often help create a wow moment in tech. So virality and adoption rapidly goes mainstream via word of mouth. Use cases, exciting use cases from day one. Costs, price point accessibility to majority. Ecosystem, thriving developer community. Got it. Prediction, I love these predictions. Robot moment won't look like ChatGPT moment. Why is that? Let's see. Scorecard, adoption, virality, and use cases, cost, and ecosystem, right? So iPhone had all of this except for cost. ChatGPT had all this except for ecosystem. Waymo, right? You probably see a lot more Waymo and SF. Use cases, but adoptability, virality, cost, and ecosystem didn't have that. Coming soon. Potential across many tasks for use cases. I mean, I guess, it's up to us humans to figure out what to do with a humanoid, just like what humans would probably do for the first time on the internet. Oh my gosh, that's funny. Potential across many, many tasks. Okay. Physical limitations to adoption, right? Cost is still high right now, and a nascent ecosystem. Got it. This is actually going pretty quick, Let's see what else we got. From seeing to experiencing, then owning robots. So in the movies, meant to entertain you, fictional and fun, to out-of-home robots built into customer experience, right? The point solution robots. Robot in coffee shop fully handles customers, and then direct ownership right here, right? Consumer owns multitask robot at home. That's I think that's really the play here for in terms of like the industries and what the industries interests are, right? Like semiconductors, yeah, they want more chips out there, so build more chips. AI industry, yeah, we want to collect, spatial data. And then robotics hardware industry, yeah, we want consumers to have all these robots, right? And then like now, what about the market, the demand side? That's the supply side. How about the demand side? Demand side, yeah, like I think consumers will probably want it when it catches on in virality, but we need to figure out what is the usage of a humanoid, right? Like, can it do physical things in certain ways for me to, I don't know, become wealthier or whatever? Or, one thing I would love is for a humanoid to mow the lawn. My gosh, mowing the lawn, yes, that would be fantastic right there. Co2 view. So what's their view? How humanoids might grow up. So year one's like a newborn, you're walking. Year three, you're speaking. Year five, you're writing, and then 15 years, you're driving. Damn. That's earlier than I did. In-home humanoid capabilities. So in year one, it'll be a humanoid cleaner, right? And then year three, humanoid chef, humanoid concierge, and then later, humanoid nanny in 15 years. Dang. Out of home humanoid capability. So this is the in-home, then outside of home, humanoid warehouses. I can see this already. Humanoid in stores. I can see that happening. Humanoid firefighters, and then humanoid surgeon in 15 years. This is their view right here, where things are going, right? Again, this is awesome because we got a big fund who gives us a 15-year secular trend view, right? So 15 years out, we could just imagine what things will look like, and then we'll figure out how to bet our money around that. Key topics: future, thriving robotics ecosystem. So what does it have here? Funding for AI robotic startups has inflected. So funding 2024 over here, and then number of rounds. So it's increasing. All right. Funding wise, about 4.5 billion. Leading talent is starting robotics companies. So from what companies? Tesla, robot type, humanoid. Leading talent is starting. Okay, got it. So these are the different companies. Uh, they're starting robots. Background from these schools and stuff. Funding. How much in funding? Founders. These are some of the names of the founders. And then robot type. Got it. An ecosystem for AI has started to emerge. So we got the apps, not yet, but what's this over here? This is the developer tools and data sets, right? So Droid, a large scale in the wild robot manipulation data set right here. These are some of the companies behind it. Operations and maintenance, okay. Foundation models right here. Okay, that's important right there. That's where the LLMs or the winning foundation models sit. And then manufacturers, right? So these are the Okay, I see it. You got to manufacture the robots, right? Vertically integrated software, hardware. So this is like across the board right here on the right. Let's keep going. It's not that long, I realize. Again, this is my first time reading it, guys, so I'm learning it with you guys. Robotics rides LLM tailwinds, but faces AV like headwinds. So tailwinds over here, talent and research. So the tailwinds is talent and research, compute and capital. The headwinds are data scarcity and supply chain constraints, right? So robotics rides LLM tailwinds but faces AV like headwinds. I see. So it's benefiting from all this over here, right? I mean, the capital, of course, but the scarcity is the data part. So that's, yeah, you gotta mine that data, right? Wintel, like partnership and walled garden approaches developing. So what do we have over here? PC era, Wintel, AI robotics. Okay, got it. Uh, so Mac to full stack, PC era to AI robotics era. Wait, hold on. OS. So Wintel era, PC era to AI robotics over here. Okay. Chip. Okay. Intel, Nvidia, and then hardware OEM to this one. Okay, I see. I see what they're pointing out here. It's just like the the evolution, right? Chip M1 to Tesla. We expect AI, not hardware, to differentiate humanoids. So what does this mean? So undifferentiated hardwares are like these car brands right here, and then software and AI layer is like a Tesla right there. And then phones, you have these phones, and then now you have Apple Intelligence, right? That's why Apple price is really bullish. Robots, and then OpenAI over here, foundation models and stuff. It looks like. So we expect AI, not hardware, to differentiate humanoids. So the money, or I mean, you can say the money's over here, really. Uh, Coatue view, robotic sectors will have different market dynamics. So in other words, the home, general purpose humanoids, vertical integration; industrial, special purpose non-humanoids, partnership approach; commercial, special purpose humanoids, partnership approach; and then defense, special purpose superhumanoids, vertical integration. Man, that's wild. We see AI robotics creating the next disruptive platform shift. So what do we got here? So TSMC, AI, hold on. I love this. Mainframe, PC, networking, desktop internet, mobile, cloud, right? Cloud right there. And then AI, the coming revolution, which we talked about last time. Also the report. And then robotics right here. And then I think that's it. That's pretty much it. Uh, Yeah, these are just disclosures. That's pretty much it. Not sure how I feel about a humanoid waiting in the laundry room, waiting, yeah, or charging. I don't know. I mean, sometimes for us humans to move into the future, we have to dive into discomfort and uncertainty, right? Sometimes for us to grow, we have to sacrifice and put in the hard hours. To build muscle at the gym, you got to go and endure pain for a long period of time. So it's all hard work, and it's not easy, but I think this is how we're gonna grow and move forward, right? Because there's so many industries that are gonna promote this and tell you why you need, robots or humanoids in your home, just as much as how the food industry has convinced the majority of us that we need, oil in like everything we eat, like bad oils in everything we eat. So yeah, supply and demand. Man, I freaking love economics. No mention of the Blade Runner pleasure model. You know, that like that just might be. I didn't want to say it, Bernard, but that's what I was thinking. Like that just might be it right there. Because if you think about it, right, we start structuring society. You got the food industry feeding bad ingredients to the majority of the population, and so right now you have a category of men who again are very addicted to OnlyFans on the internet and feel like they have no choice in life because inflation is just way out of control and they're just accumulating debt, and their job is just not taking them anywhere. And so it just seems like they can use a smart robotic assistant to make them feel less lonely. It just seems that way. So it seems like it might be a just-in-time use case, or sadly one of the first use case before like a real use case emerges, right? Like, hey, like mowing the lawn, like that could be really helpful, or just keeping the house like clean, like that's also work too, as some of you guys know, right? So, anyways, guys, we got about 5 minutes left here. I hope you guys enjoy the session. I want you guys to, when you can, try to join this FinViz Club right here because I got a personal goal of getting to 100. Once we hit 100, then that's where I'm going to close it out. So we got 3 more people joining today. Let me just approve these real quick. Approve, approve, approve. You guys are coming in. And then, yeah, by the time we get to 100, I put a price tag on it, but keep growing. And I'm excited because I think in the last couple weeks here. Well, I think it was reading that report, that internet report. So I put it here in the research report, this internet report right here. You download it, check it out. This one, when we read it 2, 3 weeks ago, it really inspired me. It inspired me because like it showed us like at one point the internet only had 100 million people online, and then through this report we watched the internet go over the years, over the last 20 years, from like 100 million people on the internet to like 5 billion, 6, 7 billion, not even the 8 billion, right? So I think the numbers, if I recall correctly, out of like 8.08 billion people on the planet, we saw in like was it 1990 or whatever, less than 100 million, all the way up to 7 billion people on the internet. On social media, we have about 5 billion on social media, and then on crypto, we have 120 million, right? So that like the crypto one I pulled externally. So in terms of like active crypto wallets and stuff like that, globally like 120 million. So this is like for crypto right now, it's like Facebook and Instagram 2003, 2008, if I recall. So that's enough for you to decide how you want to play it for the next 10 years. And so I realized like, man, like it's gonna be an awesome ride in like the next 10 years. Markets are bullish and inequality is so severe for sure. Inflation's bad, yeah. You're gonna need to learn finance more than ever. It's gonna be the most investing is gonna be the most important, the one of the most important language in economies, modern economy in like the next 10 years here. If not, you're just gonna be questioning like, why is it never enough? Why is it never enough? Why am I eating I'll probably even post about food in here, right? Because everything in here is about, mature development, investing, and I'll develop more here as well. The other cool part is you guys could chat with me too. So in here, once you join, you could directly message me. And again, I'm paying $100 a month for this, so I have to use this, right? So if you know I have to use this, and you know how I think, I have to post interesting things because again, that's just how it works. So I'm going to use this as a channel to just share like whichever, and you guys could share as well. Um, Here we got some questions here already. So yeah. Uh, Tej, I see you on here now, so I'll see you on there. So Patreon, to answer your question, looks like the question was, should I close Patreon subscription if we're joining here? No. So Patreon is still the way that people are going to be accessing the investment club. I will be changing the password next week because that's just how it is. I need people to be on board with me. If they're not, then you could go see the live stream, but now the live stream, there's an advertisement on it, so you can't really see anything. You can only hear my voice. So that's just how it is, right? I'm moving towards like people who want to be on this journey with me and that supports the community because that's how you're going to keep it alive. And I plan to grow it pretty aggressively as well. So I hope to meet more investors and I hope to dive into the internet. So people who don't want to join, that's okay. You could join other communities or not, or just be siloed, right? You could be siloed or be part of a community that has access to information or knows how to access right information. So yes, I am putting a dollar sign across the board. Right now, I mean, after 100 people, I'll put it at $10, which is still affordable. But once it hits scale, yeah, prices will increase as the internet is going to inflate, right? That's just the way it is. Because we all got to move forward in life, and well, this is the way to go, guys. I think it's gonna. That's where look. If there's a price for the person creating content, man, I'm gonna put even more content. So Patreon is still going to be there to access my reports and access my what do you call it? Access my reports and access uh, oh man, why am I losing my train of thought? Access to the webinars. What am I saying? The Zoom meetings, right? And then but also access to the community is through here. Like this is where we chat. This is like a Facebook page essentially because I'm paying for it. But everywhere else, I gotta slap advertisements on it. So again, guys, I will be changing the password for next week. So it's going to be a new password, right? It won't be Duck Rabbit anymore. Because I know some people are on free trial as well. So every month it'll be changing. But anyways, 12 o'clock. When are you going to IPO? When are you going to IPO like Wiz? Oh, me? Wait, hold on. I don't know. The question is, am I going to IPO or Wiz? I don't think I'm going to IPO. I think I'm going to keep educating myself over here and enjoy the investor journey. But IPO wise, I don't know. I think so. If we're talking about IPOs, it depends on the environment, and in the next 60 days. Well, we haven't had. Oh, there was a chart last week. Where did I get it? I think did I share it. Maybe I shared it in here somewhere in the technology analysis, or was it IPO analysis? Uh, it was somewhere in here. Yeah, this is gonna help me like come back and analyze as well. But I can't remember. So what I wanted to show was that lately, like 2021, we had the most IPOs ever, and then 2022 happened, and it just completely disappeared. Nobody wanted to go IPO, and then now 2023, still no one. Maybe just like one company. 2024, just one company, or a few companies like Rubrik and Reddit, which we're still going to watch those, by the way. So I think maybe 2025 might be the year because I'm feeling bullish for 2025. Looking at the different demographic age groups and stuff like that around the world, the money printing action going on, the investors' appetite to buy equity across the board. So yeah, I don't know. I mean, I think 2025 is going to be a good year for now. I mean, until something changes, right? But anyways. Lots of VC money already, Tej says. Good, insightful content. Thanks for sharing. You're welcome, Tej. And again, for future guys, all the reports that we analyze in here, it's going to be in this report section right here. So if you guys want to see that global internet report right here, you can just download it right there. So this is also our library of where I save all the information. Because I know like we look at a lot of reports in here and then people are like, hey, can you share that? I'm just going to share it in one hub right here, which is like the hub where I engage, I pay for it, and I'm going to be building it. So I'll catch you guys on there. And you guys could chat with me directly too. So it helps reduce the noise because I'm getting too many messages. All right, guys. Any other questions on the market for next week? I'm gonna go start writing my report for what's gonna happen this week because I'm pretty excited, and I'm also excited for Dexcom. So thank you, Bernard, for bringing up Dexcom because Dexcom, I think there's a really nice trade on the long side, but be very careful, right? Like if you want to get strategic with Dexcom, DXCM as a trade for next week. I'm going to talk more about trades next week moving forward as well, because these are all things I want to improve on, right? Uh, and I'm also like just working around the clock. Like this whole weekend, I was just obsessed with the markets, like no joke. So, oh wait, let's go into the daily. Let's go to the hourly. So this is what I'm looking at for Dexcom, right? I know it's down 40%, but assuming tomorrow, right? This is what it's going to look like. I know you're not working with much. It's hard. This is a gap down, and you could think of this as, how do I say this? The easiest way to think about this. All right, so I'm going back to the daily here. Maybe the easiest way to think about this is probably the weekly. Yeah. Here we go. This is the easiest way to think about it. It's the weekly, right? I know on the daily, all you see is a gap, but on the weekly, you actually see a candle. So think of it as a large, magnificent sell-off candle that needs to correct a little bit. And I think there's a, I don't want to use this word, right? It's infotainment purposes only, but I feel like there's extremely high probability that this bounces to 80. So with that information and the contracts available, like options right here, we gotta go do some calculations over here and what to do during the market open tomorrow. Right? This might be a chase, but I'm not gonna. I mean, for me, I'm not gonna chase it aggressively. This will be a 1% portfolio one. When you say 1%, as in 1% risking 1%, right? Is that what you're saying? Risking 1%. I think that's what you're saying, Bernard. Yes, exactly. This is not something that you rather build a portfolio like Co2 where they got a massive position in Meta. Now Facebook and all that earnings next week as well. So things are going to be really exciting next week. We'll just have to see. But those are the stocks that I currently have in mind. I'm going to add more later tonight in the report, but that's what I got so far, guys. It takes time, so you just got to put in the hours, and eventually we'll get there. So I'm going to keep learning, keep going, and see where it all goes. All right, guys. Any last questions before I power off tonight? And we'll catch you guys next week, or I'll catch you guys in the group chat or in the community over here. Again, I'm promoting it, so join my community. Openly promoting it. Janice says, "Thank you, Kay. So thankful for all the gems you share in school during the trading week as well." Hey, you're welcome, Janice. You know, it's fun. It's just way too fun. Like I'm really looking forward to next week because you have a game plan and there's something to chase. All right, guys, I'm gonna power off now. So have a good night and